Hello, 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 and welcome to Trading Made Easy right here on YouTube. Glad that you are here. I want to share with you a quick tutorial on how you can trade the volatile pairs utilizing the triple arrow system and profit each time. Now, past profits don't guarantee future profits. You can do very well today and lose everything tomorrow. That's just the nature. However, if you commit to refining your craft, studying and following your rules, your confirmations, and exercising discipline and patience, not giving into those impulses of greed and all of those things, you can profit in the market. Okay, so it's not the external things that cause people to not profit. It's the internal things that cause people not to profit, like that discipline, like that patience, like that greed. So you have to manage those things in conjunction with following your rules, and you should do great. So today I am going to show you how you can utilize the triple arrow system with the volatile pairs and profit in the market. Now, what we are going to be talking about is a 20 pip strategy, a 20 pip strategy, which I use all the time. I have a private Telegram group where I'm teaching that as well. I have a private trading Facebook group where I am, sharing that as well. And of course, I do one-on-one coaching for those individuals who so desire. One thing that I do recommend that you have so that you can ensure that you have the proper tools is the triple arrow. Triple arrow system is my primary trading system. So there's not anything that I'm going to do without incorporating the triple arrow system because it's just that effective. Now, what you can do is you can go to the previous videos that you're going to find on this channel and learn about the triple arrow system, learn about the effectiveness, learn about the ease of use, learn about the power of the triple arrow system. And then, my friend, if you so desire, then connect with me. I'm going to leave my link in the description so that you can get your hands on this system as well. So today, what I'm going to be talking to you about is how to trade volatile pairs and profit consistently utilizing the triple arrow system. So what you're looking at is the triple arrow system, right? I've added a couple of things that is not a part of the system, but it actually helps to refine your entry. Now, there is no perfect entry in my opinion. You may hear otherwise in the trading world, but I don't believe that there is a perfect entry because price is king. Price is going to do what it's going to do. As traders, what we are to do is analyze the market, and based on the analysis, we incorporate the best or the highest probable winning trade. That's what we do. We follow our confirmations and we let it go. We've done all we can do because we can't control the market. When you have the triple arrow system, you have that extra edge in the market, that extra sight in the market that people don't have that don't have this system. So an edge is always a good thing. An edge is always a good thing. And so when you do your analysis with the help of the triple arrow system, you increase your winning probability of your probable winning trade. Okay. All right. So what you're looking at here is the triple arrow system. What I've added is the 50 moving average, the yellow line that you see here. Right. And then, of course, I put my period separators here. These are my day separators. And on MetaTrader 4, you can just simply go right click and go to properties if you want to add that. And make sure common is clicked right here and then select show period separators. And what that does is put the lines on there and it separates each trading day so that you can see the movement and the activity per day, which is very, very key information as well. Okay. So I added that. and of course I added my 50 moving average, and everything else is the triple arrow system. Okay, so now what we're looking at is GU. GU is one of the major currencies. It's also a Great British Pound currency, which is all your GBP pairs are your largest or your highest volatile pairs. They have the most volatility, and that's simply because the GBP pairs carry the most volume, and it carries about 70 to 75% of the total volume of revenue or exchange that takes place in the market on a daily basis. So you can see with percentages like that, the Great British Pound is always going to be more volatile. The movement of the Great British Pounds is far more volatile than any other pair, So high volatility is actually a good thing in the market. It's actually a good thing. One of the benefits of trading a high volatile pair is that it does not have to move much to get your pips. That's provided you're not trying to get hundreds of pips per trade, okay? But to get your pips, and in our case, we're just doing 20 pips. That's it. We're not trying to do 50 and 100 and on and on and on. We're not really trying to accomplish that. We're focusing on the lowest hanging fruit, 20 pips. The market will sneeze and give you 20 pips, and we compound our account. That's the name of the games, guys. That's the name of the game. Because here's the deal. The longer you're in the market, the greater the chance of the market going against you, and going against you in a way that can potentially hit your stop loss or blow your account. So what we do is we focus on the minimum pips, which is 20 in our case, right? We focus on 20 pips in and out of the market, but we compound our account. We increase our lot size. That's what we're doing. And we have minimal risk. It's not necessary to be in the market long to get the profit that you are targeting for yourself. It's not necessary when you scale up, meaning increase your lot size. I also have a trading plan, which is the 20 pip trading plan. I also have that I will be making available to all of those individuals who request to enter into our trading group. So that's going to be my gift to you. Okay. And you can also get the tutorials on how we're using that in the Telegram group. So double benefits for those that are part of the Trading Made Easy family. All right, so let's get to it. Let me just show you. Okay, so triple arrows. Again, I'm not explaining the triple arrows on this. I'm only explaining the 20 pips and how you can utilize a high volatile pair like a Great British Pound pair and be in and out of the market with your 20 pips on a daily basis. Now, if you're anything like me, you want to see your money increase daily. I want to see my money in the bank daily. And this is one of the ways that you can accomplish that as well. So what we do is we only trade the direction of the big arrow. Point blank. We only trade the direction of the big arrow. Can you counter trend trade? Absolutely. And the triple arrow system allows you to do that effectively and safely. Okay, so that's another video. But rule of thumb, we only trade in the direction of the triple arrow. So whatever that trend is, that's where we trade it. So what does that mean? That means you have to be okay with leaving some pips on the table. As a matter of fact, if you're utilizing the 20 pip strategy, you're going to leave a lot of pips on the table. And that's okay. That's okay. We are focusing on scaling up our lot size, compounding our account, not increasing our lot. So if you don't trade that way, then this is not for you. At least this tutorial here is not for you. Okay. Okay, so we're trading in the direction of the big arrow. So the big arrow right here is bullish, right? Why? Because it's going up. The big arrow is going up. So what it's telling us is that the market wants to reverse its direction and start moving in an upward trend. Now that's all the big arrow is telling us. That doesn't mean we're going to get in the trade. So we have our triple arrows that came in to solidify that. Now, what we do is we wait for key confirmations. Not really a lot of them either. What you're going to find that's going to serve you well is your patience. So what we wait for is, one, we're buying. So we're only looking for buys. That's it. We're only looking for buys. And what we do is we wait for the MACD. I have to put my glasses on. Bear with me. We wait for the MACD to cross over this midsection, which I call the 0-0 line, because that's the midsection that separates the buyers on the top from the sellers on the bottom. Okay, so we will put an alert once we get the big arrow. We're going to put in an alert in TradingView, or you can use Easy Indicators as a indicator, an app that you can download on your phone. As long as you have an app where you can actually put an alert on an indicator, you can use that. Okay, so once we get our big arrow, we put the alert on the 0-0-0 line on the MACD. Okay, and then we just go about our business. We're not looking at the chart. We're living life, right? We're living life. Once we get the alert, we come back to the chart, which it would have been right around in this area here. We come back to the chart and we wait for the active candle, the candle that's active at the time that you get there. We wait for it to close. When it closes, we want to make sure that it closes above the 50 moving average, because we're buying. We're only looking for buys. And so in this case, where this candle is where the alert would have gone off, right in that area here. So we come to the market. The first thing we want to do, we want to look left. We're looking left to ensure that we have our triple arrows. And I can guarantee you 99.9% of the time, you will have your triple arrows. But look left just to make sure, right? Because if you don't have it, then you will wait. All right, so you have your candle here is active when you come, so we're waiting for it to close, and this applies to any time frame. Doesn't matter. Wait for the candle to close. You're waiting because you want to ensure that the candle closes above your 50 moving average. When the candle closes above your 50 moving average, you can then take that position. You can market execution, and you can take that position. So I'm going to put my crosshair right on the top of the base or the body of the candle, right? Because we're not talking about wicks. We're talking about where did it close. The closing and the opening pertains to the base, right? So right here is where we would get in, okay? Market execution, and we're going to take that up, what? 20 pips. 20 pips. Now, you press down on your crosshair, hold on your cursor, drag it up to 20 pips. The second group of numbers that you see here refers to the pips. So we're going to go up to 20, or between 20 and 22. Okay. You see 227 in the middle set of numbers. Always put a decimal between the last two numbers, and that becomes your pip count. So it's not 227 pips, it's actually 22.7 pips. So, and the third set of numbers is your price that coincides with that pip count. So the 1.28401 becomes your take profit. For 22.7 pips. Now, were you in the market long? You see that first number, the 0? That is your candle counter. So basically, it's going to count how many candles it took before you reach that pip amount. And as you can see, it's just this. It hasn't closed. We're on the hour chart, so that candle hadn't closed before you made your 22.7 pips. That's why you see 0 there. Okay, so you're in. and you're out. You're done. You're done. So right here on this candle is where you made your pips. And you made your pips before that candle actually closed. Pretty good. You're done for the day. You're done for the day. And you can trade, I don't recommend trading more than 2 pairs or 2 trades, I should say, a day. Because again, we focus on compounding. And if you need more assistance with compounding, you certainly want to join the Facebook group, and you want to join the community here with the Triple Arrow system, so that you can be properly coached on how to maximize this system. Okay, but you first have to come through the Trading Made Easy Facebook group, and that's just my preference on how I am receiving new people and helping them and training them. It's an exclusive group, and that's just how I'm doing it, right? So if you want to be a part of that, just click the link that's going to be in the description and request access, and I will approve for you to get in, and then we can go from there. You can do a private coaching and all of that great stuff. All right, so you see how that works. Now, again, so that was that day, right? We're still looking for buys, and we're going to continue to look for buys until we have a big arrow that's going in the opposite direction, which tells us that price is now preparing to reverse and go back down. And then guess what? We do the opposite. We look for sales. So, I mean, this is just a win-win scenario any way that you look at it when you're using the Triple Arrow system. All right, so this was day 1. You made your money, right? And again, even on one trade, I can show you how to compound that one trade. A lot of neat things, but let's just move on. Okay, so day 2, we're still looking for buys. Right? So now what we're going to be looking for, we wait until when? All right, we have a little arrow that's pointing up, right? You see the arrow that's pointing up? We have that there. And what's going on with the MACD? Align it with the MACD. The MACD is a crossover. The blue line is crossing over. You wouldn't see this yet, but you can see at this point that the blue line is like what we call a kiss. It's about to cross over, and the candle has closed above your 50. Okay, so with that, you can actually take that trade, or you can wait until you can clearly see your blue MACD line that is above the red line. Anytime that your moving average is above your volume indicators, you're in buyer's territory. Anytime that your moving averages are below the volume indicators, you're in seller's territory. So that's one thing. That's the overall. But within each territory, you still will have times where you're selling in a buyer's territory or you're buying in a seller's territory. And that is identified by way of a crossover. Whenever your moving averages cross each other, it's switching positions. So when the blue line is above the red line, you're in a buyer's territory. If you're in a overall buyer's territory because it's on above and the blue line is on top of the red, strong buyer's territory. That's what that means. Now, if you are in buyer's territory, meaning your moving averages is above your indicators, you're in an overall buyer's territory, but your red is on top of the blue. What that means is for a period, and typically a short period, the sellers have picked up volume. So you don't want to trade. You don't want to trade during that time because that's a pullback. Though it's going to go back in your direction, wait for the pullback. Just wait. It's not necessary to put your account in unnecessary strain when you don't have to. So I hope that makes sense. So in this case here, we have our bullish candle that has closed above the 50, right? Look down at the MACD. The MACD is tight. It looks like you're about to have a crossover. It is above, but it's very, very close to this middle section. So it will not hurt to wait until you can clearly see it being rising above, right? Doesn't have to be all the way up, but you can clearly see that it has crossed over. And when you see that, then in this case, it would have lined up here or even right around in this area. Yep, so we right in this green area here. So what you could do, wait for it to close. Always wait for it to close because that's your confirmation, right? And then take your position. Now, so we would say right here on the top of this candle, we would have gotten in for what? 20 pips. Market execution, take it up, 20 pips. 20.8. I like to do like 22. 22.3 pips. You see that? And then the price, the take profit price is 1.28591. And you're done. How long did that take? This is the hour chart. But it hasn't taken an hour. We know that. Why? Because we have a zero. That first number there tells us it counts the candles that it takes before you can get to that pip amount. It's zero, meaning it hasn't closed. The whole candle hasn't closed, so the whole hour wasn't up. So you made your pips within that hour time frame, whether it was the first 15 minutes, 45 minutes, whatever. It wasn't an hour. That's a beautiful thing. So day 2, you made your money. You made your money. Now we're in day 3. Look at this MACD. It's well above. Anytime that you have space between your 0 line and your moving average, when you have space, that is high volume or a stronger move or stronger position. And it's above our indicator at the top, our top indicator is above, so it's in an overall buyer's market, right? So now we're on day 3. What are we waiting for, right? In day 3, honestly, you can just really take a trade. Now, a buyer's trade, I would wait for my small candles, which is consolidation. I will wait for the consolidation to break. I will wait for a breakout out of that consolidation, which will put me right around in this area here of this candle. Okay, so let's see where would that line up with the MACD. Okay, right at a crossover, right at the peak of a crossover, right at the peak of a crossover, right? So you can take that. Now we're going to go 20 pips. That's 25 pips. Still not even the whole hour because we still got that zero there. So you made your money here as well. So I think that you get the message, and you can see clearly, and we can go back. You can go back and back test your GBPs. This is GU. Any Great British Pound pair will provide the volatility because, as I mentioned, that's the highest volatile pair in the whole Forex industry, market, I should say. So any pair, GU, one of the major pairs. So yeah, you're going to get some movement out of that. So that will be a good pair to use for your 20 pips. You're in and out of the market. You're in and out of the market, and you're compounding your account. Again, I'll show you how to do that in our one-on-ones and our private coaching, some tutorials that I provide inside of our Telegram group. Now, our Telegram group, I have to say, is not really for beginners, though I don't mind you being there so that you can begin to just kind of see what's happening and get accustomed to the language that's being used and things like that. But it's not a place where you're learning what is a pip, what is a trend line, what is support. That's not the place. You need a one-on-one. You need private coaching for that, and so I provide that, right? And I think that's it. So that's the name of the game. Get in, get out, and make your money. 20 pips will change your life. 20 pips will change your life and how you live and where you live and all the things that you desire. 20 pips. No need to put your account at risk trying to get 100 pips when you can get 20 and make the same amount of money that you would make if you was getting a larger amount. And I'll show you how to do that. So that is it for this video. Can't wait to see you on the next video. If this video provides you with any kind of value, please, if you don't mind, giving me a thumbs up. If you have a question, just put it in the comments. I do give notification and I'll answer it. And of course, subscribe to the channel so that you can stay in the know, and hit that link that's below so that I can see you in the Facebook group. You all have a great night. Bye-bye.